Hey, good morning. Comment Televoo, how are you? Welcome to Forex.Today. What are you trading? All right. Let's get on with it. Yo. Welcome to Forex.Today, the YouTube community of 1, 2, 3, 4, 5, 6, 7, 8, 9, 20,000 foreign exchange traders. That's a lot, dude. It's a small community, really. So 20,000 is pretty good. Welcome. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. How are you? I will be your guide today on this thing we call Forex. We'll cover gold, oil, Bitcoin, dollar pairs, yen pairs. It's not a bad morning. What you been up to? You've been trading? What have you been trading? You've been studying? What have you been studying? Going through your charts? What did you see? First of all, have you identified your strengths and weaknesses? Did you do that over the weekend like my book suggests? No? So what are you doing? What's your goal today? Oh, Wayne, I'm going to sit. I'm going to make a bunch of trades, and over time I'll get better. Nope, I disagree. The analogy here is that's like going to the driving range to learn how to golf. Every day you hit a bat, you get a bucket of golf balls, and you go out there and you stand a little bit incorrectly, and you grip your club a little bit wrong, and you swing not very well, and every day you hit 100 poorly hit golf shots. But you think, well, I'll just keep at it and maybe at the end of the year I'll be a better golfer. No, you just hit 30,000 really poorly hit shots, and guess what? You're probably not much better. And besides, probably 90% of your shots are with a driver. So when you're out on the golf course and you need an 8-iron, you're not very good. So let's turn this positive. I recommend you go through your charts, identify your strengths and weaknesses, find some things that you want to work on, but also pat yourself in the back and find some things that you're fairly good at and say, okay, look, these are good. I got these. I don't have to stress so much about these things because you know yourself, but you're also working on something very specific this week. Price action, for example, pivot points, Fibonacci, big time frames, small time frames. I don't know, but figure something out, man. Be a little more specific. So anyways, there's my general advice to you. Great. So we'll go through the charts and all that kind of stuff. Just let me know how I can help. The raison d'etre of these live streams that I've been doing for almost 20 years is every single day I want to help in different ways. I don't put you into trades. And a lot of that's why maybe these webinars are not as popular as some of the other ones, because I just don't make the decisions for you. But I do want to show you different means of making decisions, different techniques for taking positions. And then I also or at least strive to try to get you to think maybe a little bit differently about what we do. How do you what matters? Why? The why. And I hope at the very least you find that interesting, but maybe it helps you make decisions. Hopefully it helps you make decisions. Okay. So anyways, ask questions and I will do my best to help. I hope you find these live streams a valuable resource. If you do, please subscribe. Please leave comments. In the description below the video, there is a link to my book. Okay. Remember, I sold the rights to that book a million years ago. So that belongs to Wiley Publishing. They set the price and all that kind of stuff. They make the vast majority of profits. I don't even know if I cash the checks anymore. But anyways, it might be a helpful resource, and I'm not pitching that to make $5. Okay? So the link is in the description below. By the way, if you love it or hate it, leave a review. Some people say, hey, it's pretty good. Other people say it's the worst book ever written, ever. Well, hey, I'm number one. The number one worst book ever written. Okay, cool. Also below is a link to free training videos, or like a free training course. Pivot points, Fibonacci, moving averages, oscillators, that kind of stuff. That's in the description below, totally free. Then there's a link to fxbootcamp.com, which is a community. The basis of that, for $88 a year, you learn pretty much everything you need to know about currency trading, macroeconomics, monetary policy, swing trading, day trading, trader psychology, things like taking control of your trading, lots of technical analysis, lots and lots. And you're like, how does a pitchfork work? Man, that's in there. Okay. $88 a year, obviously priced in such a way that I'm not out there to get rich quick by selling that much material for $88. I'm trying to entice you to join the community, and maybe you'll join one of the live groups where I can work with you. I mean, the day trading group, if you include these webinars every day, right? Pre-New York, then there's another one for pre-Asia, and then there's another one for pre-Europe. And it's amazing the different angles of attack that you'll learn how to make decisions for yourself. Also in the description below is a link to tradersway.com. We're all traders. We all need brokers. I believe Traders Way to be an ethical, trustworthy brokerage firm. Fast execution speed, which I've tested with third-party statistics. They're fast. The spreads are very competitive, very, very narrow most of the time. I mean, like all the time, but sometimes I'm looking as I'm trading, like in Asia and stuff, when spreads are widen and then come back down, which is just a function of the interbanking system. Very often I'm like, dude, that euro dollar is like, oh my God. Compared to back when I first started trading, pound dollar was 12 pips back in 2002. Just a pound dollar regular trade was 12, and then it came down, then it came down, and then it was like 4, 5, or 6. So now, man, your cost of doing this business is plummeted, and Traders Way is very competitive. Execution speed's fast, but also the swaps are really big, and that's good because that's income. So all those resources are there for you. I hope you utilize them. What's going on with my internet? Huh? Internet's a little slow today. All right, internet's a little slow today. Hopefully everything's okay. Nothing I can really do about it in the moment. Fingers crossed, maybe. All right, so here we is, and here we shall be. We're looking at Bitcoin coming back down to 20,000. Anybody going to buy it? Okay. Well, when you're looking at the daily pivots, this is a buy zone, and you can see that didn't work. Well, maybe because we're not in a bullish market. Remember, you only use them bullish pivots in a bullish market. Okay. Then we have here, and then we're back to where we were, and then we're back to where we were. So this is an indication of currently sideways. If you are a bull, that means every time we get close to 20K, you might want to consider buying it. If you're a bear, you want to get below 20K, return to 20K, and then drop it like it's hot. So tomorrow's sell zone is about here. And you can say, oh my God, that's where we are now. Okay? You see? A lot of you guys say it's heading down. Okay, great. Then we're at tomorrow's sell zone right now, and then you should probably be in that modus operandi, okay, and be taking it down. Luca is saying, hey, oil back down to the 90s? Potentially. Okay. We can get to that, but that's a demand issue now. A future demand issue. Assumption of future demand. So I guess we can flip over and do that now. Okay. Oil prices were high. Okay. Because there was a concern that supply would fall. Okay, this is quantity and this is price. So if this is the normal level, okay, and now there's less supply because, let's say, the war in Ukraine, then price is going to go from this equilibria to that, and then prices have gone up. So now what? Now what if demand falls? Why would it fall? Well, people are now saying, oh my God, we're going to go into recession next year. Okay? So if we move demand lower, that's a D. My mouse is not very good. Okay, now what? Quantity demanded is falling. Okay, and now what do? What happens? Okay, we went from P1. Well, and you could argue we were way up higher, so even more dramatic. Let's just go from the original equilibrium, then price falls. But now we might be falling from this price. So P1 might be up here and P2 might be down here. And the fall is a little further, right? Nonetheless, what will happen is we will find equilibrium. And then you have to trade one side or the other. And are you a demand trader or are you a supply trader? Okay. What also might be happening is people that have been using oil, I don't know, as a new asset class when everything else was falling, they might have been buying oil, trading it up. And now oil's coming down. Maybe they're exiting. Maybe they're leaving. And it goes back to the normal market. So let's take a longer term view. Okay. So what did occur? What do we know? Okay. This is an aggressive entry, and R3 is a logical exit. And so now this is happening. Does that make sense? Yeah. Does it mean we're going all the way down here? I don't know yet. I don't know yet. Okay. But I think we can pay attention, to that 95 to 100 level. Lucas says, in Germany, public transportation for the next 2 months is free. Why would that make oil fall? So you're like, okay, so they're not charging for you to get on public transportation, but is the public transportation using energy? Okay. All right, so pay attention to that. If you want to break this down, where are we for the month? Okay, and we're approaching support. Okay. Now, we call this an inside month. Okay. You might argue that this is, that this is R1. Not quite, but pretty close. And this is S1. Okay. So I think as we get to this 103 area, and then maybe lower at 95, 96, those are the two levels of support. Okay. Patrick says it's not free, it's only €9. The thing is, what is being charged, whether it's free or €9, somebody's got to pay. So let's just say it uses gasoline. I don't know what European public transportation probably doesn't use gasoline, but someone's got to pay for the gas, irregardless of what is being charged. That's okay. So a government can run a deficit and just say, you know what? Our people are hurting. We want to buy votes, which is more likely the truth. So we'll run a deficit and we'll subsidize public transportation so you don't have to pay a bajillion just to go to work for your socialist big dog company. But it doesn't matter. There's no free lunch. And then you get Joe Biden, who's now driving me nuts. Now, honestly, here's what I thought today in my meditation. I understand more today than ever before how some people hated Trump so much. Because from their point of view, it was just counter. He was that counter to their beliefs. So I have friends that just, the only thing they wanted to talk about was how bad Trump was. I'm like, dude, I get it. But now I'm starting to like scratch my head where I'm kind of getting that way with Biden, where I'm just like, dude, I really don't like this guy. So I don't mean to go political here, but when he was on Jimmy Kimmel the other night and he wore the mask when he was not around people, then the screen came up and he came out and he took off the mask. And then he went to shake the guy's hand, the co-host, not Jimmy Kimmel. And then I'm like, dude, he doesn't even know who Jimmy Kimmel is, which is fine, I guess. And then he's doing this. He's like shooting into the air. And I'm like, oh my God. It just drove me nuts. But now, one of the things I talked about a long time ago was this idea of a tax holiday on gasoline. And I'm like, dude, first of all, it's a gimmick. You might save $1. Doesn't really change much. I don't care. Because, again, I only fill up the tank on the Porsche every couple of months, right? So the other day I filled up and it was $100. Hey, I don't care if it's 99 or 100. And I don't think most people would. Okay, great. But we just ran on top of our normal spending, we ran $5 trillion deficit on top of our deficit. And so, dude, don't cut your revenue. Come on. And in fact, what the federal government should do to cure inflation, according to Milton Friedman, they should raise taxes and just say, look, we got to pay for COVID. I saved your life. He could come out and say, look, I saved our life. I saved America. It cost $5 trillion. Good. Guess what? You're not dead. Your spouse isn't dead. Your kids aren't dead. Your auntie's not dead. I saved everybody I possibly could. It cost $5 trillion. So now you got to pay for it and raise taxes on everybody because you gave money to everybody. Don't just raise taxes on the rich. So that's what should happen. So to come in and say, like, and by the way, not a political point of view, I'm an economist. So anyways, so now when they come in and are like, we're going to do this tax holiday, it's not going to make a difference. We're going to basically, because now it's subsidized, again, it's free money at a time when I guess he wants to appear like he's doing something. And I'm like, dude, it's BS in my humble opinion. And it just drives me nuts. Right? Just drives me nuts. Anyways, so I think he's the most political politician I've ever seen, or maybe I'm just maturing now and I'm seeing it differently. But all the other presidents seem to be different. They seem to be their own people, and he seems to be like not so politics, right? So anyways. Right? So anyways, so just like, I don't know. So I didn't mean to go political there, but the tax holiday just sounds stupid to me, and gimmicky and political, and I hate that. I hate that. Anyways. Okay. So again, I apologize for going political, but you know, when you're studying the supply and demand of let's say the economics of WTI, okay, one way to bring prices down, as you can see here, is cause a recession. Does anybody like that? Okay. No, I don't want a recession. So the other way to do it is increase supply. Okay. Okay. And by the way, if the United States is break even, or let's say a net exporter, so it comes and goes, then we make money. Like, I don't know. It's just... Okay, so anyways. So we're coming down. The point I want to make technically is this price is interesting and down here is interesting. Okay. Lucas says they're getting their electricity from coal and nuclear, not oil. Yeah. Well, and the funny thing is it shouldn't be oil, it should be nat gas. Daniel says, isn't Forex correlated more to the financial markets than the balance of trade? Yes and no. So it's behavioral finance is like, it'll be based on the basic economics, like balance of trade, for example, for long periods of time until it doesn't. So like George Soros will say, logically, let's say he sees the stock market like this, logically. But then you get long periods of time where the stock market actually does this. Okay, reflexology, no, reflectivity, reflex, whatever. And, right, and it's like that, this period here would be that time where everything is correlated, like everything is coming down because everything is coming down. And they might have different economics behind why they come down, but nonetheless, they come down. Because the stock market might, in the beginning, come down because inflation's going up, and then the stock market's coming down because recession. So inflation goes up, makes the stock comes down, but then recession hits, and then stocks come down. But this is inflationary. This is deflationary. It's the opposite, but nonetheless, they come down. Which you have to, at one point, decide, and this is in particular to professional investors, is what do you want to own and why do you want to own it? Some people bought companies that were called growth stocks that were betting on the future. That's pretty much it. We assume in the future this company is going to make a lot of money. We assume in the future the company is going to continue growing at 10% a year. We assume in the future, blah, 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 blah. So future cash flows are important. But even then, you don't even care. You're just like, everyone's going to have a bicycle with one wheel in their apartment. Okay? And then there's other companies that just make money, and they've been around 100 years. So like there's two companies I'm in the process of buying now. Okay. British BP Minerals and Rio Tinto. They make money. They've been around a couple of 100 years, but probably even more than that. They produce minerals, so whether it's cobalt or lithium or copper or a bunch of other things, I mean, almost everything you can imagine you can pull out of the ground, these guys pull out of the ground. They're also in like probably 10 countries each, if not more. And then they invest into other companies that are doing things. So like, if you want cobalt, they probably provide some of it, right? Thing is, they've been making profits, okay, for hundreds of years. Right now, they're paying a dividend. Rio is paying 12% per year dividend, and this one 10% per year, roughly. I think this is 9.5. Interest pay. You're collecting interest. Right? So at some point, once you get the stock market, so going back to the George Soros thing, okay, let's say the stock market does this, is what it should do. We call that a business cycle. And then you get something like this. At some point, you want to own something. And I want you to know why you want to own it. And that's sort of the difference. Now, a lot of people, let's say we're in this part of the cycle, there might be a lot of people that are just exiting now. They're just exiting. Hold, bail. I gotcha. And this might be this period where, let's say here is 2020. So let's label this maybe. Let's say this is 2020, okay? And remember, during this period, I was saving money to buy a dip. Now, sure, maybe I bought some here and I bought some here, and I'll probably buy some here and I'll buy some here. Okay, whatever. And then maybe this is 2024. And maybe the biggest distance here will be later this year, so we'll call this 2023. Okay. And that's kind of like what George Soros is saying is like, it's logical, then it's irrational. Call it irrational exuberance, if you will. Then there's a reckoning, and then there's an overshoot to the downside where at some point, all those that were patient are no longer patient. And there's a lot of rationale for that. So let's say you were a Bitcoin millionaire last year. And you're like, I got all this money tied up in Bitcoin and I don't want to sell it at 45 or 55. Because do you remember Kathy Wood telling you it was going to go to 200,000? Well, if you believe that, then why would you exit at 55? Or even 45 as it was coming down? So, but you're like, how do I access this equity? Kind of like a home equity loan. How do you exit it? I'll use my Bitcoin as collateral. Now the collateral's underwater. We're going to do the Powell stuff. You know what? I'm doing other stuff. I'm doing deep, massive research in the oil industry for the course that I'm putting together. So, in fact, check this out. Isn't that beautiful? This is one of the slides. Isn't that beautiful? It's beautiful, right? Isn't that great? You're like, I can barely see what's happening. It's beautiful. Okay. Notice the price of oil over on the right-hand side changing. Okay. Anyways, so I'm am I going to watch the Powell testimony? I think the narrative right now is he's okay with the recession, and that's what's getting priced in, and that's why this is coming down. So am I going to watch it? I think I know what he's going to say. I have the market going all the time. So if something happens, I can watch, but whatever. Matrix says, hey, good picks on the stocks. Been in them for a few years. Well, yeah, I'd rather buy them for, 50% off, however, right? So even better. That's why the effective yield has gone up. So Matrix, if you've owned them for a few years, you probably are buying them at the same price as me that I'm buying now. So Matrix might be flat on price, but probably was picking up 5% a year in dividends. Okay. So you're like guaranteed 5%. Now the thing is, or it's really, let's say $5 a share you're going to collect regardless of the price. So as price falls, the effective yield goes up. Okay. Daniel says, he asked the question because it's about global money flow. Well, see, that's not behavioral per se. The price of WTI and the global market may be two things. So what's baked in the price now is the world will need less energy. Why? Less economic activity. Therefore, that will impact the flow of money. But then you have to ask yourself, how does that impact things like the dollar? Well, if the U.S. now is neutral, it imports a lot of oil, but it exports a lot of oil. The net of it is it won't impact the U.S. dollar. How does that impact Europe? How does that impact China or Japan? Okay. So now that's what you're looking at. Okay. Okay. Lucas says we are heading for Mad Max deflation. My recommendation for you is get rich, be rich during deflation. It's not going to solve all your problems, but it's going to solve many of them. Okay? Anthony says 170 trillion in debt. You can't give people free stuff, right? Well, it's like a credit card. As long as you can afford your bill. So you're like, I'll pay $20, but you're like, but you have $10,000 on your credit card. I'll pay the minimum. Okay. Forex Pivot says U.S. oil exports must drop. Okay, must drop if U.S. production drops. Well, I mean, look, we need a certain amount of oil. And the surplus we can export. So less surplus, yes. Okay. Okay. But it matters compared to the old day before fracking. If oil went up $20 a barrel and we imported 100 million barrels a day, it costs $200 million a day to import the oil, which, by the way, means you're selling US dollars. So the dollar weakens by $200 million a day. Okay? Pretty reasonable. Day after day after day after day. It has some sort of impact on the value of the dollar. But when you're neutral now, you import and export, and prices go up, it doesn't impact the dollar at all, or certainly not as much as it used to. Okay? Also, there was a time when high oil prices would create a recession. But because of independence now, much, much less so. Okay. But for Japan, who imports all their oil, if oil prices go up, does it hurt the Japanese government? Yeah. Why? What happens to the Japanese yen? Let's take a look at the Japanese yen. Okay. Let's go back to a 4-hour. Okay. What happens to the Japanese yen when oil prices go up? They have to sell their yen in exchange for oil. Okay. So they're shorting Japanese yen and longing oil. Interesting, huh? Oops. I get rid of all that. Anthony says, what will it do tomorrow? The Bank of Japan is very clear, and they tell you in very clear words, very succinct. In fact, very often the press release is like 1, maybe 2 paragraphs. We're going to buy this particular 10-year Japanese government bond. This one, these ones, and these ones. At this price on these days. And yet, Forex traders don't pay attention. Oh, whatever. Oops. Do, 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 do. Okay. Okay. By the way, meeting minutes came out recently. Oh, that's Excel. I don't want to do that right now. I'll just do this. Okay, this tells you what they're thinking and their rationale. It's beautiful. Beautiful. I mean, think of it. If you read this stuff, not just Bank of Japan, but all of them, what they're doing is they're looking at all the economic indicators I've taught you to look at. They're looking at everything. CPI in every country, PPI, GDP, PCE, jobs, all of this stuff. And they have their PhDs in quants analyze it, do PowerPoint decks to them, and then they discuss it as a committee of economists and politicians that manage the economy and directly or indirectly impact the value of their currency. And then they tell you. They tell you what they're looking at, but also, if you're asking me like, well, Wayne, what about the balance of trade? What about inflation? What about this? What about that? They discuss it and basically translate it. Like, what does it mean, Wayne? They discuss it and basically translate all this data for you. And so now you could have the meeting minutes, which are the notes of the discussion, from the Fed, from the Bank of Japan, the Bank of England, the ECB, so on and so forth. And you can read all their summaries and get an idea, all these different translations of the same data. What does it all mean, Basil? Well, you get to oversee very smart people that have direct and indirect influence over what we do as a industry. And you get to see their points of view and maybe frame your own. Okay? Well, Patrick, macro is everything. So the impacts of yen, sure. Either directly or indirectly, it's covered. So one way of looking at it is, well, what kind of economy does Japan have? An importing economy or exporting economy? And if so, what do they want for their currency? Do they want a strong currency or a weak currency? Okay. What's good for Japan? What does it appear? Does it appear that a weak currency is good or a strong currency is good? Which one looks to be the best for Japan? Meanwhile, this whole period, the Bank of Japan is intervening in the market. So what seems to be their intention? Or at least the consequence of their intention, or a consequence of the global market. This could just be yield curve control. This could just be oil prices, or it could be a combination. So if you thought, well, they're selling yen to buy oil, and then oil prices are coming down, then maybe you want to buy yen. Or you can say, I don't want to buy yen, but there's not going to be another up as long as oil prices are coming down. Cool. Now you're stinking. Okay? Not just a pretty face anymore. Okay? And then you're like, well, how does that impact Canada, who seems to be a net export of crude? Okay? And do you think this is long run? Or do you think this is short run? Are you a buyer or are you a seller? Okay. Okay. And so you can see that people must make decisions. And not everybody agrees, and that's what we call a market. Okay? I still have this one marked. Okay? No. Mr. Kennedy says, hey, if they're net exporter, they want a strong currency. No, they want a weak currency. Okay. So let's say, okay, China makes a laptop and Japan makes a laptop. So let's change it. Lenovo, I think is how you spell it, and Sony. And they sell a laptop and they sell a laptop. And let's say you look for the same type of laptop. Certain amount of memory. You want an OLED screen. It has to weigh less than 2 pounds. You want whatever. And very often they have the same graphic card, the same screen, all that kind of stuff, right? So a laptop is a laptop is a laptop. They're ubiquitous based on how you're shopping. You want a particular type of laptop that will do a very particular type of thing. Great. So you're shopping apples for apples is what I'm saying. Now, the yuan okay, let's say China is enacting policies that will weaken its currency. And let's say Sony does nothing. Or, Japan does nothing. Let's say Japan is neutral. Japan is neutral. All right. So now to an American, let's say you're an American, USA, #1. Okay. In terms of dollars, because the yuan has fallen, you take your US dollar. Because the yuan's fallen, you need less US dollars to buy the yuan. So this one is $120 because the yuan has fallen. This laptop in yen, because yen hasn't changed, is $1,300. And of course, the laptop industry is quite sensitive to prices. Okay. So anyways, an American might say, well, these are pretty much the same laptop. I'll buy this one. Okay. And now, worst case scenario, Japan enacts a policy that strengthens the yen. And now, in terms of dollars, an American will have to spend more to buy the yen to pay Sony. And now, in terms of dollars, now the laptop hasn't changed in price, according to the Japanese, just in terms of, right? So now an American will need to spend $1,400 for that same laptop. And the more this diverges, so the yuan falls even more, now it's $1,100 and this one's $1,400, you're definitely going to buy this. So as an exporter, you want cheaper currency. And you want the Americans to have strong currency. So how does China do it? They take their currency, they sell yuan, buy USD. Okay? And what happens? Okay? Now, in this case, because this is what China's doing, they're selling yuan, so the value goes down. They're buying dollar, so the demand goes up, so the price of that goes up. And now the laptop is now $999. And way cheaper than the Japanese laptop. And that nobody buys Sony anymore. So China would want a weak currency. And they would prefer, like, let's say their biggest customers are USA and Euro. So they'll sell their currency, buy this, sell their currency, buy this, and now we buy stuff from China. Okay? And what happens? We buy laptops, they buy bonds. We buy laptops, they buy bonds. We buy laptops, they buy bonds. Right? We buy laptops, they buy bonds. And around, because when we buy a laptop, we're selling dollar, buying yuan, so then they get paid, and then they take yuan and buy dollars. Yuan, dollars, yuan, dollars, yuan, dollars, yuan, dollars. And that is a flow of money. That's a cash flow. Okay? So does China want an economy where the United States stops buying laptops because they can't afford it anymore? They just got no money? No. Patrick says that's the reason at the moment the Bank of Japan wants a weak yen. Maybe. Okay. Maybe. Problem is, you need more yen to buy stuff from foreigners. Now, if you're a domestic economy, if you're a closed economy, does it matter? If you're North Korea, okay, if you're North Korea, is your currency strong or weak? It's neutral. So, if they run out of, let's say, a legitimate currency, they can just print some dollar bills, whatever North Korea uses. They just print some paper money, or go to their bank and just ones and zeros, but they can just put more money into the economy to pay people. And what happens is it becomes worth less and less and less, which means now you need to be compensated more because what you're getting compensated with is worth less. So now you have to get more, but that means prices are higher. So if you're selling tables and chairs as a carpenter, someone comes in and they used to pay you $1,000, and you're like, but $1,000 used to buy me a month's worth of food. Now it's only 2 weeks worth of food, and I need to eat. I'm a carpenter. I need to eat. So a table and chair now costs $2,000. Okay. And you're like, well, what if no one wants, right? What if no one wants to pay? Well, this is what supply and demand is. Okay, demand, okay, and supply. So again, you have to say, okay, if this is quantity and price. Okay, so at this quantity, or sorry, at this price, this amount of tables and chairs will be demanded. Price goes up to here. And the quantity demanded is less. Okay? So prices go up, quantity falls. Now, if this many tables and chairs were produced, at some point you'll have to lower prices, and that's deflation. Okay? So what about a situation, though, where the cost is rising to produce the tables and chairs? The nails cost more and the wood costs more. Oops. Let's redo that. Think about what the supply curve means, by the way. They never really teach us well in school, but think about what it means. Okay? The higher you're willing to pay, the more likely a supplier is going to supply. So what is the supplier worried about? So you're building tables and chairs. What's the cost of wood? What's the cost of nails? What's the cost of varnish? Oops. What's the cost of rent? And electricity for lights and heat and salary and insurance. Okay? So on and so forth. And you get your costs. Then you have to say, all right, how many tables and chairs do I build? You have to think about it. Well, how many are being demanded? Will I sell more next year and all that kind of stuff? And you take your units, okay? So let's say you make 100 sets of tables and chairs per year or per month, whatever. Divide that by your cost, okay? And you get per unit. So you might find when you add up all your expenses and divide by the units, you get your marginal cost. So your marginal cost might be $100 per tables and chairs. So what if the price is 72? You're out. You stop building tables and chairs. That's it. And supply falls. Then what? Prices rise. 205. Well, you get your salary. You pay your rent, so the landlord gets his or her money. The electricity, the insurance, everybody gets their money. So will you produce at 105? Yeah. At 104? Yeah. At 103, 102, 101, even 100, you're like, but it's equal to marginal cost. Yeah, but you're getting paid and you're able to pay your invoices and your expenses and you're happy. $99, you're losing money. Okay? So if your costs go up, your prices have to go up, or you're out, and if you're out, supply falls. Okay? So anyways, always two sides of the equation, and these costs are important to whether there's production. So for example, if Joe Biden adds another 20% on top, okay, on top of the oil company. So remember, you had all this cost. Okay? And Joe Biden comes in and says, take all your costs and then add another 20% because you have more money than God. Well, the oil prices are not dictated by Exxon. Joe Biden apparently hates Exxon. They make more money than God. We should punish them. Okay? Okay? Does ExxonMobil set prices? Are they artificially manipulating the market so they make more money than God? Is that what's going on? Really? Some of these projects take 20 years to produce. Really? Exxon knows how to, right? Are they really setting prices? When oil prices went to zero, was that Exxon going, you know what? We need to drop oil prices to zero. What kind of organization sets prices? A monopoly. Monopolies are illegal in the United States. Okay? Mahai says, why do they have record profits? Prices are high. But no one was going to bail out Exxon when prices were low. My point is Exxon doesn't set the price. Only monopolies are price makers. Exxon's price takers. If prices drop below their marginal cost, let's go back to that. Okay. Okay. Let's not call this supply. Let's call that marginal cost. Okay. And demand. And you got price here. You have quantity. So if price falls below the marginal cost. So let's say this is $58 a barrel. And that is equal to the marginal cost. The oil companies are producing oil. They have enough to pay their shareholders and their employees and their insurance and their research and development and all that kind of stuff. They have enough. Okay, so now prices drop below to 48. Is the federal government going to bail them out? No. So what happens? Well, they stop investing into research and development, and they stop investing into new wells. Why? To manipulate the market because they're greedy? I'm like, it's common sense. They can't afford to do it. Oil prices went to zero. Nobody bailed out Exxon. Did Exxon drop it from 58 to 48? Did Exxon make it go to 120? No. But if Joe Biden comes in and says, well, take all your costs and then add another 20% on top of it. After you pay your taxes, pay us another 20% taxes because you're greedy. So, okay, they're like, great. So now it's $68 to produce oil. They're like, okay, well, it just increases our marginal costs. They're going to pay it, but they'll only drill oil out of the ground if now we're at 68. In a weird way, the government raised prices because they raised the marginal cost. Okay? Now, if a monopoly can control prices, that's not what Exxon is. When was the last time the King of Saudi Arabia visited the United States? Maybe to go to Orlando or to watch Hamilton on Broadway or to live it up in Las Vegas. Does anybody know when? Oh, sorry, Jason. Well, we're still talking. Obviously, this is on. But this is. You can use this instead of oil. Just replace it with laptops. Lucas says never. Why? What's wrong with America? America is the number one country in the world. It's illegal to run a monopoly in the United States, and he could be arrested for collusion and manipulating the oil market. It's illegal in the United States. Exxon cannot do it. It's illegal. Mr. Kennedy, you can build. Yeah, for sure. So anyways, just interesting. So supply and demand is what it's at. And then when things go wrong, it's usually a government involved. Okay? So like if prices go up in a capitalist free market, what happens? You find entrepreneurial ways to increase supply, or you improve your technology to increase supply, which obviously takes entrepreneurialism. And what happens if the government comes in and says, you know what, oil prices are too high? What if Joe Biden says, you know what, if you elect me president of the United States, I will make it illegal to sell oil above $50 a barrel. The government will come in and will mandate it, and that will make oil and gas prices come down. You're not allowed to sell oil to Americans for more than $50. You will have a chronic shortage, and oil and gas prices, you won't be able to get it. But let's say in a black market, you would be able to probably charge $1,000. There would be no fuel. And you're like, well, wait, it's $50. Okay. Well, at $50, this much is demanded, quantity one, but the supply is here. Okay. And who's supplying at $50? Anyone that has a marginal cost less than $50. There are places in Alberta that produce oil for like $13 a barrel. But fracking probably costs $70 a barrel. So say goodbye to fracking. Say goodbye to all the surplus of cheap natural gas in America. Just say all of a sudden, very few, so Saudi Arabia and a few others, some places in Canada, but very, very few suppliers of oil can produce $50 a barrel oil or less. Okay? And at some point, we'll suck those wells dry and there'll just be nothing left. And those companies will need new investment to go find new supply, but it'll cost them $90 to get it. Plus money up front, 3, 4, 5 years in advance. They're like, yeah, but you're guaranteed to lose money under that situation. Okay. Therefore, whatever's available, okay, people out hustle in the black market and say, well, I'll do whatever it takes. Sort of like China buying Russia oil. Whatever. They get it cheap because Russia's got to find a way to sell their oil. Anyways, kind of the opposite, but anyways. Okay. David says, do you place a limit on pivots if there's no supporting structure? Well, why would you invest into something that didn't have a supporting structure? Anywho. All right, so we talked about yen. I think you can figure it out. You have to go look and decide what Japan is doing and what's in the best interest of Japan. And of course, what's going on macroeconomically. Nobody's going to buy a laptop from China or Japan if they lose their job. What does that mean? Do you remember when I did this? Yuan, dollar, yuan, dollar, yuan, dollar. Okay? You're selling USD to buy a laptop. You lose your laptop or you lose your job, you don't buy a laptop, you don't sell dollar. So what happens when the market believes we might have a recession coming? Dollar's strong. And this is the thing. You were taught when things are bad, the dollar's bad. Wrong. Okay? Maybe that's why college professors don't drive Lambos. David, this question again is limit orders. Look, if you wanted to buy this, could you use a limit order and say, If it double bottoms here or if it makes a lower low, yeah. But the thing is, you don't buy that. You don't buy that. If you're a bull, I don't care what your limit order is. You don't buy it. You're a bull. Okay? So what if it did this? Do you buy that with a limit order? Yeah, sure. And probably put your stop here, and now you're long. Okay? Where I think a lot of people go wrong, let's say you're looking at weekly pivots, and this is a weekly M2. So they're like, oh, so I buy that, right, Wayne? Because you told me in your course that's a bullish pivot, right, Wayne? In an uptrend. I don't care if it's M2 in a downtrend. What do I care about? M3. To sell. So, and what are you saying? Recession. Recession? It doesn't even look right. Recession in the USA and probably Great Britain. Okay. Yeah, but Volvos are not Swedish anymore, right? Does a ponytail, goatee, corduroy jacket person drive a non-Swedish car? Is it still Swedish? I thought they sold. I just Googled it and it says Sweden, but I thought they sold. Well, apparently to Google, it's still Swedish. That's right, Richard. So that's what I drill, right, Richard? How many times have you heard me say that? 100,000 times, right? Oh, yeah, they're great, Jason. Right? Bulls also sell M4s and R2s and R3s, depending on how bullish the market is and where we are in the season. Is that right, Lucas? Yeah, they make commercial trucks. Yeah, the big rigs. Yeah, and who knows? Maybe Tesla will put them out of business. But if you're as small as you are with Volvo, maybe you can raise money and say, you're going to be the leading. So they're probably going to go right after Tesla and be out there with autonomous driving trucks and electric trucks and everything. Okay. So I'm going to drag this across. Okay. Kiwi. Okay, do you guys remember covering this? Okay. Okay. Long run down. Does anyone know the difference between short run economics and long run economics? It has nothing to do with time. I mean, indirectly, obviously, long run means bigger time, but it doesn't mean like, well, one is days and the other one is years. No. Yeah, in economics, it's long run is variables can change, and in the short run, variables can't change. So for example, oil prices go up in the short run to $125 a barrel. How long does it take to find new sources of oil, drill it, suck it out of the ground, and then sell it to somebody? Even if it's in your neighborhood, how long does it take to get that to market? Yet alone sell it to somebody on the other side of the world. Well, more than a few days. The thing is, on the short run, you just can't do that. No matter how high oil prices are, you can't just produce twice as much oil and take advantage of it. Now, in Forex, it's almost reverse, right? Where I'd say on the long run, we have macro set because central banking policy doesn't change that often. So for example, the Fed's policy now is to raise interest rates, and they will continue to raise interest rates at least for a year, maybe more, and then they'll have to adjust, and that adjustment would be a new policy. So on the short run, that ain't going to change today, tomorrow, next month, next quarter, end of the year. That ain't going to change. So I'd almost reverse it. So on the long run, okay, this is down, Bubba. On the short run, it might be up. You're like, look, we had an update today. Well, isn't that special? Sell the shit out of that. Could be one point of view. I'm not saying that's what you should do. But you should look at it and you're like, all right, on the short run, it's going up. I got it. I get it. That's really cool. On the long run, it's wrong. Or overvalued. You're like, pfft. Okay? And the thing is, what a lot of people don't understand is this is bulls. As much as it might, bears. Sorry. As much as it's bulls, it very much could just be bears. Could be. Now, a bull might be down in here and they're like, okay, I want to buy it. Okay, great. But very often, if it's a downtrend, bears sold, bears bought, and bears are going to sell again, okay? Until we get down to maybe where there's some more orders on the bullish. But then why would you want to buy this? Well, you might argue China's opening up, but then someone else can argue, well, we have COVID problems in Shenzhen, and still parts of Beijing, and still parts of Shanghai, and then 27 other cities you've never heard of. Oh, so someone has the counter argument, and that's what a market's about. So we argue down here, but really, I guess you could argue, okay, you could argue this is bulls, because what do we know? If you know how to trade, if you were an FX boot camper, and by the way, pay the $88 and join the group, the community. Pay the $88. You're going to get more than $88 worth of value. Okay? Anywho, if you know how to trade and you were a bull and you saw this as a counter trend, which you would know why if you know how to trade, then on Sunday, you analyzed the opportunities of the week. The Kiwi dollar opportunities of the week. It's super simple. Now, you don't know if it happens. You don't know the future, but you know what you would do if you were you, and you made this decision technically, fundamentally, and all this other kind of stuff. And over the whole weekend, you thought all weekend, okay? So this happened Thursday, Friday. So Saturday and Sunday, you're sitting by your pool, drinking margaritas, getting beautiful suntan on your gorgeous body. And you're thinking, I can't frickin' wait to buy that Kiwi dollar. Okay? That's how a pro trades, by the way. All weekend, you're like, I just can't wait. Sucking on that margarita. Okay? And then Sunday opens, and you're so happy. The markets are open again. You have plan A, and you have plan B. And you might even have a plan C, depending on the price action. And what does everybody else do? Lose money. Okay, cool. Well, what if you were a bear and you're like, but Wayne, I analyzed this and I'm a bear. And of course, that's what this is about, right? Cool. Good job. You made your decision. Love it. I don't know if I agree with it. Who cares? So what would your plan be? Okay. Well, you want to sell here. Oops. Let's make that in black. Okay. But that never happened. As soon as the market opened, that was dead. Ish kaput, ja? Okay. So what's your next one? Sell here. Okay. And what's your next plan? Well, you're probably going to try this. Which one's right? I have no idea. But I can tell you, if you're making it up as you go, my guess is you're losing money. You're not blue. You're not black. You're certainly not green. You're probably red. And then you're like, but how did you know? No, nobody knows. But what is it? No. Shh. Okay? Get to the point where fundamentally or technically you've made a decision. And then, by the way, that's called strategy. That's it. That's why my book is called Strategic and Tactical Forex Trading. My belief, right or wrong, I don't know if I'm right or wrong. I believe you must have strategy first and foremost. What do you want to do? You can't answer that? Forget it. Now, a lot of people are going to get pissed off on that and say, no, it's all in the price. Whatever. Cool. Okay. So a trend trader, for example, Michael Covell is a famous trend trader. He doesn't look at fundamentals at all. And you might agree with him. And there's no way I can say, no, well, Michael Covell's wrong. I would supplement trend trading with the rationale behind the trend. And you're just like, well, that might not help. It might help you get out with profits sooner. Because when the fundamental change occurs, you're out and not necessarily waiting for that big. Because the weakness to a trend trader, from what I've seen, in particular, so Michael Covell was one of the guys in the original Market Wizards, right? And there's a few trend traders at that time, and I think they actually all knew each other. So it's not a great sample, but they traded long, for example, bought lumber, I think was one of them. And they held it for years and made a killing, except they never cashed out. And then it dropped by 40, 50, 60%, and they still didn't get out. And I'm like, well, this sounds dumb to me. My humble opinion. Michael Covell's not dumb. The total traders made money. I just thought there was a weakness in the strategy. You have to, at least, if you don't understand why, but you're buying it because of some sort of technical entry, maybe the why would help you get out because you can see it coming. You're like, well, what do you mean you can see it coming? Well, if the Fed, for example, 1 year from now starts talking about how close they are to potential, the terminal rate, and that unemployment is rising and it concerns them, and inflation seems to be falling precipitously because of demand destruction, you could say to yourself, someone that's long the US dollar, oh my God, I should probably be trimming my position, maybe even taking profit, maybe even selling. versus just waiting for, you know, 1,000 pip drop to get out, whatever the signal is, you know, a daily 2155 cross. Well, dude, a daily 2150 cross down is a logical trend trading exit, whatever your moving averages are, but that could take 4 months. Well, why don't you just get out earlier? Or at least trim the profit or move the stop or something. You see, like, I'm not trying to say my way is the best way, or I'm the best trader, or that Michael Covell is stupid, or trend trading is stupid, or technical analysis only is stupid. I'm not saying scalping is stupid. I'm not saying position trading. I don't think anything is stupid. I think we're all beautiful children in God's eyes. Let that sink in. But I also believe there's a healthy balance of strategy and tactics, and that's my preach. Okay? So if you're a bear, you have a simplified view of the world. The complexity is combining multiple time frames. Sure. Okay? Okay. Versus chasing price action and all that kind of stuff, right? See, I think there's value with a chart like this, especially strategically. But then what about a chart like do we want this one? I'll just pick Kiwi. No, we just had Kiwi. I don't want to kill that one. Let's do Euro. And you can see I'm doing the same type of analysis. Okay? All right. And by the way, somebody said, why is Euro up today? Well, maybe it's fundamental or maybe it's just technical. Okay? Again, what would a bull do with a higher high? Over the entire weekend, they had a higher high, it fell. Okay? Think about what a bull planned. What is it, Wednesday? Think about what a bull planned on Saturday or even Friday of last week. This is where I'm trying to get you. What did a bull plan Friday of last week before they shut down? Before they went home for the weekend? What did they think about? And sitting by their pool, tanning their gorgeous, beautiful body, sucking on a fabulous fruity drink, living the lifestyle of the rich and famous. What were they thinking about all week? A bull said this. Okay? It's actually that. That's it. They didn't know if they were right. They knew what they wanted to do. And then you might say, but Wayne, aren't there bears? Hell yeah. What were they thinking? Okay. In this is the best place. Now, some people might trade the double top, whatever. I don't like double tops. I like double tops, lower lows. And so are they thinking this? Yeah. I don't know who's right. I just know what a bull would do and a bear would do. Is that helpful? Yeah, it can be. Okay. But at the end of the week, we'll either be at, let's say, 103-ish or lower, or we're going to be at 107-ish. Probably not higher, but whatever. It can go wherever it wants. But remember, that was the plan. I know that that's what was planned from a bull. And what will happen next will probably look like something like this. Or we just get this terrible scenario where, it goes almost up and then it comes back and then, and then we're all over the place. Yeah, that happens too. And that's why they invented stop losses. So what do we do to figure out who's stronger? You got to be one or the other. One team wins, one team loses. The losing team usually doesn't lose money, by the way. Okay? For example, let's do this in red. Let's say a bear sold that. Okay? Okay. They were profitable for a day and a half. Cool. Where's the stop now? Well, probably somewhere in here. And so what would create this? You know what creates that move right there? Bears. I want you to think about this. And I think I'll leave you guys here because I have another half of a Cohiba that needs attending to. Okay? Who would buy this? A bull? I want you to really think about this. This is going to make a breakthrough. This is going to make a difference in your trading career. Think about all the training. Maybe you took my training or some other kid's training. I could say that because I've been trading longer than most gurus have even been alive. Okay? Cool. So who buys a triple top? The answer is not a bull. There's no training course. Now, I've never taken a training course. But I can't imagine a world where somebody says, wait for a triple top and then buy it. There's no bull in the world that dumb. And if it's you, be careful. Because then maybe I'm having an emotional impact. You're like, wait, dude, I just bought it. Okay. 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 No bull will buy a triple top. Ever. So then who's buying? Why would it go up if nobody's buying it? Well, somebody is buying it. Who's buying it? And this, by the way, Healthy Fit says, well, not an educated person. Well, I'm about to school you, son. This is important. It's about to take you to another level. Somebody is buying it. It won't go up unless somebody buys it. But it's not bulls. So who's left? Well, it wouldn't be sell orders because sell orders are selling. They're buy orders, but not bulls. You got to think about this. Like, this is important. Somebody's buying. There's orders in the market to buy, but it's not a bull. They're bearish stop losses. At this point, it's a stop hunt. So now the next question is, where would a bear sell again? How about that central pivot? Or how about in this zone? And the answer is maybe and maybe. But who is supposed to sell up here? Because remember, do you sell higher highs? How many bears have been told to sell a higher high? Have you taken a course that said, wait for a higher high and then sell? There probably is. Mean reversion bullshit. It's too low, buy it. It's too high, sell it. Bullshit. Okay? I think that's dangerous. I don't care if you won the Nobel Prize, Black Scholes. What they did was stupid. It went to 1 standard deviation, so they sold. And then it went to 2 standard deviations, and then they sold. It went to 3 standard deviations, they sold, and then they went bankrupt. They should have just bought it. All right. So, sellers don't sell here. But it's red. Red means down in the Western world. So why did I make this red? Okay? And by the way, just so you know the history of the world, If you ever see someone else with pivot points that are colored right here, and maybe even red, I invented all this crap. And you're like, Wayne, that's arrogant. No, honestly, swear to God. I was there. I did it. Okay? So there's a reason I made it red. And I've never, ever called it a sell zone. Okay? It can go higher, but this is where bulls sell. Those are sell orders that bulls placed. Because think of it this way. Okay, a bull bought here, they put their stop here, and they put their limit order here. They said, buy it at 105, put a stop at 104 or 103.50, and exit at 107. And they're done. Now, you might have 75 different small trades inside of all this, and you're like, why am I getting sliced and diced? Okay. Now, by the way, we don't know if this is true. Okay. We don't know if it's right, but some guy or gal placed that trade and hasn't looked at it since. How many people here stare at their charts for hours and hours and hours and hours and hours and hours and hours every day, day after day after day, long and short, short and long, right? This professional trader bought one here, put a limit here, put a stop down here, and they haven't looked at it since. It took 5 minutes. Done. And they drive a yellow Lamborghini. Okay. Okay. Denise is guilty. Okay. You ever feel like you hit 10,000 golf balls and you still suck at golf? Maybe you should take some lessons. Subscribing to the magazine doesn't help. Subscribing to the golf channel to watch golf on TV, you're like, well, I watch McIlroy. I watched him all weekend, and I still suck at golf. Watching me on YouTube for 20 years is entertaining and maybe informative, but you got to get into the details, the nitty-gritty. And like I said right at the beginning, I'll leave you with the same thought. What are you doing right now to get better? Give me one specific comment. You're getting better at price action. You get better at setting limits. You get better at monthly and weekly pivot points. You're getting better at day trading inside of swing trading. You're getting better at fundamentals. You're getting better at just reading meeting minutes. You say, this week, I will go to every major central bank in the world, download the recent meeting minutes, and read them. I don't even care if you don't understand. The fact that you're just doing it makes you the top 1%. And by the way, we do have people like that in the FX Bootcamp community. Okay? Unstoppable. Zach, for example, is a monster machine in discipline and work ethic. And when I told Zach, go to the central banking websites and spend at least an hour on each one of them and just read and learn and download reports and just look at it. He did it and created detailed written reports of every single one. He's a monster, a machine. He's a natural born killer. Is he going to be a better trader? I have no idea, but I would bet on him. Zach's whooping your butt. And this is a zero-sum game, many will tell you. So he's more likely to win because at the end of the day, he'll deserve it more. Yeah. So maybe in the comment below the video, would you do this? In the comment, make a declaration to yourself. Document it publicly. Otherwise, it's like a contract with yourself. Document in the description below today's recording the one thing you're going to work on for the next 7 days. Be very specific. The one thing. I'm going to work on scalping. I'm going to work on price action. I'm going to just the one thing, even if it's just going to each website and spending 15 minutes on the Bank of Japan website today. Do you have what it takes to spend a whopping 15 minutes on a central banking website? No, Wayne, you're asking too much. All right, well, I hope your MACD makes good decisions for you. Peace on earth. May the pips be with you. May your profits be above average. I know that sounded like a bitch slap, but I got nothing but love for you. I want you to succeed. Go get them. But you got to earn it. You can't wish for it. Okay? The Stoics hate dreamers, by the way. The Stoics. I'm studying Stoicism. Memento mori. That's why I got skulls all over my arm. Memento mori. What are you going to do today? Because you might be dead tomorrow. The Stoics hate dreamers. We're talking about Plato, Epictetus, Marcus Aurelius, really well-known people. They hated people with passion because they're like, by and large, those people are full of shit. They just sit around dreaming all day. What a Stoic says is, great, glad. What the hell are you going to do about it today? So stop dreaming, is what a Stoic would say. What the hell are you going to do today? Document it and then do it. That's what Marcus Aurelius, who was a leader of the entire Western world at a time of war around all his peripheral borders and a plague in his capital city. Kind of sounds like today, huh? And he's like, dreamers are dreamers. Stoics are action. Document your action, and I'll see you tomorrow. Have the best day ever.